All right. Welcome, everybody. Welcome to Talkin Investing. You're here with Tom and George. If you live in the United States, today was a day off from trading, but cryptocurrency does not take days off. So we got a lot to go through. A lot happened this week. The Fed is the big news of the week. The market semi lost its mind. I want to go through all of that and talk about it because I think probably most of you are going to somewhere between disagree and strongly disagree with what I have to say. But I'm going to walk you through my thoughts on the Fed, on oil, on geopolitics, and most of all on cryptocurrency. And we're going to take a look at our basket of stocks, our data center stocks, formerly known as the Bitcoin mining companies. And some of them had some big news this week, and there's a lot going on in that sector as well. George, what's up?
Well, Tom, the stock market remains at near all-time highs as investors are cautiously worried about inflation, interest rates, and AI earnings. Is this a bubble getting ready to burst? Large technology companies continued to drive much of the capital gains this week, while AI spending remains kind of okay. The Federal Reserve keeps a caution tone on rate cuts. Markets are still debating how many cuts should occur or should there be rate increases. Oil prices remain very geopolitical. And that's all I'm going to say about that, because higher fuel prices keep the billionaires rich. Bitcoin continues to trade at historic lows. It says at near, this is what it says about Bitcoin, trading near historic highs. What are you, stupid?
Not highs, not highs. Lows.
And then XRP is the coin of the future. Believe in XRP or you will die. Just telling you what it says. Stable coins are becoming an important part of global payments. And what in the world is going on with the housing market? Do you not understand that we need to lower rates? Sorry.
Rates.
That's it.
That's a lot of stuff. Well, they're speaking your language with XRP, George. So that's I know.
I might have added that in a little bit.
All right, fair enough. All right, we got to start right out with a personal request. If you guys could smash the like button. Today was a day off in the market in the U.S. Most people are not necessarily paying attention, so let's get some likes going and get this stream out to the, I would say, the masses. But let's get it out. Let's get it out. Let's get an audience going here so we can get a good discussion going.
Too many brownies. Yes, you're right.
And Dan, thanks for the super chat. Dan said, "Are we going to see a relief rally for Bitcoin, or are we going lower?" So that's the.
I think we're in it.
That's the question. I would rephrase that, and maybe we can do
I'm
a
getting
poll.
to the poll right now.
Is the relief rally over? Because we actually had a decent bounce, and we're going to go through. I am going to go through some technical pattern stuff. We don't fixate on that here, but we don't ignore it either. So we were technically oversold to a level where we were almost assuredly going to have a relief rally. The question is, we bounced up about $8,000 from there. Was that it? Is that it? Now are we headed back down? So what direction are we going next from here?
I'm going to the end of the year pricing, see if people have changed their mind.
Yeah, absolutely.
I did some big ranges.
Of
course, my computer crashed.
I'm going to send out a message because nobody ever gets a notice for this. So I'm going to quickly just.
As you do that, Tom, Bitcoin end of year 60 to 70, 70 to 85, 85 to 100, or is it gonna be lower than 60,000? And I'm gonna give you my answer with a caveat. My answer is I have a new passion, and the passion is seeing what the Senate is going to do every day. And I give you two answers. If we don't pass the Clarity Act, which I don't believe we're going to, at least not until after the midterms, then it's going to be right around where it is right now. It's just going to kind of stay right steady where it is. If the Clarity Act does pass, I would put it at above 100, personally. Not financial advice.
By the end of the year.
Yes, by the end of the year. Look at that. 50% of people are 60K or lower by the end of the year.
Wow. All right. Good. Thank you to Milligs, if I pronounced that correctly. Thanks for the super chat, who said, good thing miners shifted to power companies. So that, yes, and you can see we're still debating on exactly what to call these companies because some of them are hybrids. I got a nice article that talks about the shift that's going on today. But yeah, I mean, if there was zero shift into power companies and high performance computing, these stocks would have been left for dead. There's just, we can only speculate, but that seems highly likely to me. And I am going to talk about one stock, much to George's dismay, that I cannot find a bull case scenario for. And I looked as hard as I could. So
is that ABTZ?
We will see.
I bet you it is. Sometimes you just got to roll the dice, brother. Sub 40, mid-July. Thanks makes money. But you know what? It all has to do with the Clarity Act. If the Clarity Act doesn't pass, I believe you to be right. I believe it will be in the 40s. I don't know if it'll go sub 40, but I believe it will get down to 40. It all has to do with this damn Clarity Act.
So we got a nice split going in this.
Waffles, what's going on? What's going on with Illinois?
I don't know what's going on, but I saw somebody else say I live there, and that's not true.
Oh, okay.
I don't know who's right, but that's what's going on in the chat. So somebody's right, somebody may not be.
Oh, implemented a point. Oh, they're trying to. They are trying to do this. I saw it the other day. Implemented a 0.2% new tax on any crypto transactions.
So that's being talked about, it sounds like.
It's being talked about. I don't know if it passed. Did it pass, guys? I don't know.
Alexander saying that's the new law.
Wow. Those, pardon my expression, I wanted to say fuckers. They really want your money, guys. I hope you realize the government and big money is no different. They want your money. They don't want you to have it. You don't deserve it. It's theirs once removed.
All right, let's see. Sour Melon Gaming, very long time member. Welcome to the stream, and thanks for the super chat. Said Bitcoin will end 2026 under 60,000 and no Clarity Act in 2026. We've got, I don't know exactly what happened this week, but everyone's pretty shook. This is a very different poll than we've had recently. I will tell you guys, I am still holding that I believe 60,000 is the bottom and it's going to hold. Now, okay, we got to 59,000. We could candle wick under that, but I don't think you're going to see a trend under 60. Having said that, obviously it's clearly not off the table, right? We're at 63,000 right now. We are 2 bad hours away from being under 60,000. So I get it. And right now, these are the polls that I like the best because they really show like we're pretty up in the air on what's going on here. We got people in every category. Under 60,000 or lower is winning. It does not have a majority, but it is in first place. 85 to 100K and 60 to 70K are tied, 70 to 85K. So the over-under, about 58% of you think it's going to be over 60, and 42% of you think it's going to be under 60 by the end of the year. I find those numbers very surprising. This one is probably a poll I'm going to do a screen grab on, and we will revisit this later in the year.
Tom, Illinois is the first state to pass a tax. They call it the Digital Asset Business Activity Tax, 0.2%.
Well, if I had to take three guesses which one would be the first state to do that, that would have been my second or third guess.
Yeah.
So we're probably going to get two more real quick.
If you move it exchange to exchange, you got to pay it. And it's all, they have not specified which crypto, so they're saying all crypto.
Well, we're going to have to dig in on that. And did I see correctly 2%? Because that's
no. 200. So on $100,000, it would be $200.
So 0.2%.
Yeah.
So they want a VIG on every transaction. It sounds like
only rich people have Bitcoin.
And we'll see how that goes.
Dude, what is wrong with that state? What's wrong with 3 states? Sorry. This is not a political channel. Shut up, George. Sorry. Go on.
The only thing I have to say to that is please smash the like button. Number one. And number two, that gets a George. That gets a Georgism.
Yeah.
George alert. All right. So, that aside, all right, that's not a good thing. Hopefully that's not a trend. That's not where we want to see any of this going. And I don't think that's where most of the world is going to end up. So Bitcoin's having a little bit of a run as we're talking. It's up, a few $100s. And there's a line here of support that I'd like to see it close above. But the real number I'm looking at is 60,000. And that's the poll that we ran. Are we going to finish above or below 60,000? Are we going to hold 60,000? Are we going to test lower numbers as the crypto winner at the beginning? Are we in the middle? Are we at the end? I have articles that argue each one of those points. So I want to talk about all three of those points today because there's loud voices saying all three of those scenarios. And obviously one of them is going to prove to be correct and the other two won't. And I really want to talk about the main thing I want to get out there is I want to talk about what happened with the Fed and the market's reaction, because I just don't know if everybody was watching the same speech that I was. I'm baffled at the reaction to this, and I'll throw a caveat on that. To some extent, I'm not baffled. I think you're just being lied to. And I'm going to prove it on this stream. I'm going to bring receipts because the shock on this was 100% unjustified. There wasn't one word. So first of all, rates were not changed. That was priced in 99 point something percent chance. So no surprise there. Nobody can argue that was a surprise. Number two, I'm going to go through point by point. Every single thing that Kevin said, he has said before. He's on record. He's loudly on record. And so there was no new news here. And oh, by the way, I don't know how you could interpret what he said as hawkish, but across the board, they are trying to convince you guys that was a hawkish meeting. The Fed tanked the market. Kevin Warsh destroyed the market and cryptocurrency. And I'm just going to push back on that hard, because that's not what happened. And we saw, here's, one of the things, we saw a rally after hours. That's how fast the market changed their mind on that. But the headlines didn't change. They keep pushing them out. And I'm going to show you a lot of those headlines. They are pounding the drum that there's some disaster going on at the Fed. This is some surprise, quick, hawkish turn that came out of nowhere, and we're going to raise rates, and we will take a vote on this. But I'm just going to be on record. I have to say it's my opinion, because, it hasn't happened yet, so it's not a fact, but there will be no rate hike. Anybody that left that meeting, anybody that listened to that meeting, read what the Fed said, listened to what Kevin said, and listened to the question and answer. If you left that meeting thinking, wow, the Fed just got a lot more hawkish, I can't even fathom how you could walk away from it that way. By the way, from a Fed that we knew, Jerome Powell was openly, proudly hawkish. He was stubbornly not lowering rates and saying, don't even look for a rate cut. So did we get worse than that? I mean, that's been the consistent talking point.
That was funny.
What?
Did we get worse than that? Sorry.
I don't think Kevin Warsh said anything that anybody should have been surprised at. I almost could have written what he said before he said it. And in fact, somebody else did, and it was front page news. So I'm going to show you everything he said was headline news 1 or 2 days before the meeting happened. So they're not telling the truth. They're not being honest. No one was surprised by this. If a headline the day before says A is going to happen, and then the next day A happens, all right, you can't then put a headline that says shocking result, A happened, because you literally predicted it the day before. And that's exactly what's happening with the Fed right now. And far too many people, I am afraid, are being duped. And it's going to be, if you get this wrong, you stand to, instead of make a lot of money, you stand to get wrecked.
Yeah. And I mean, Tom, I'm so scared, I'm afraid to do anything.
That's where they want you. You are exactly where they drove you. So that is my point, and that is why I put a thumbnail that. Well, so you have conviction and you're holding. So that's. I want people to hear this, right? It doesn't benefit me in any way, shape, or form. I'm going to do whatever I do in my own portfolio. So obviously, these are just my opinions. But when I see stuff like this is why we started the channel. We're trying to fight back against these narratives from. I'm not even call it mainstream media. It's big money. It's hedge fund money. It's a lot of different players want you to lose. They actively want you to lose. They deploy their capital using a strategy to try to make you lose. And we're just trying to go counterpoint here and talk about what's going on instead of just getting overwhelmed with a deluge of everybody telling you the same silly talking points. I want to get to Armoon899. Thank you very much for the super chat. Bitcoin stays down as long as MicroStrategy and Stretch remain a drag. Sailor needs to stop buying Bitcoin and let Stretch go. We're going to talk about Stretch, stock ticker STRC. That is Strategy's preferred stock. It has come unhinged. I did send a note to all the members while this was happening because it's a big story. We're going to thank you, Armoon. I will be talking about that. I have an article about it. I'm going to show you exactly what's going on there. And it's one of the reasons I'm most likely going to sell my strategy or MSTR. I did buy a position in that. It came, I sold at 350 a long time ago. I bought at 110, and I think it closed at what? Like 112. So I am almost back to break even. I think I can deploy that capital better, and it is because of what Armoon is saying. So it's because strategy is dragging. I don't think it's dragging Bitcoin down. So that's where I would depart. But I think it's dragging the common stock of strategy, formerly Microstrategy. I think the common stock really doesn't stand a chance to rally until their preferred stock gets right. And later I will go through this and show you how wrong it is right now. This is the worst it's ever been. So people are going to take that arbitrage potential from where they are right now to what's considered par value for that stock. I think a lot of people are going to go close that gap before they start buying the common stock. So that's a drag on the common stock. I think I understand a lot of people think Michael Saylor dictates what happens to Bitcoin, but I think the reports of that are largely overstated. That story is bigger than it should be. Obviously, they're a gigantic holder of Bitcoin. They hold over 840,000 Bitcoin. They are a big buyer of Bitcoin. But
well, I have a question. How are
George.
they going to get STRC back to par?
Well, as this person, as Armoon suggested, I think they got to stop. They got to pause their borrowing and purchasing for a period of time. I think they also have to let things simmer down. This will naturally gravitate. Half of this move is going to come naturally because people are going to look at that as they did. I sent a notice out to all the members when Stretch got down to $83. So I'm going to just go finish this conversation right now because we might as well have it while we're having it. And then we'll come back to the Fed. So you can see this got down to $82.81. At $83, I sent a message out to everybody and said, this thing's come unhinged. And you can see there was a massive arbitrage opportunity. It went from 83 already back to, 88 and a half, almost 89. This will creep back towards 100. This is considered a $100 par value situation. It's paid dividends. It pays a massive dividend. So, if you could buy this at 83, you could take the ride from 83 to 100 and then take the dividend. And, you've gotten a double win in a short period of time. There's going to be a lot of money that takes that preferred stock instead of the common stock. So this thing has to get right. They can't let this fall off the rails. And some of it is just, there is severe panic right now. The fear and greed index is at, extreme fear. And everybody just, is convinced really because of big money and all of the talking points coming at us at light speed. Everyone is convinced that the Fed is about to create a disaster. And I'm going to really go against the grain here, and we'll do a poll on this later. I'm still at a high level of confidence that we will lower rates. The Fed will lower rates this year. That's how wrong I think the story is that you're getting. So at the end of the year, if they raise rates, everybody can come back and drop in the comments that I'm an idiot. I don't know the future, right? We'll see what happens between now and then. But every piece of this puzzle that I can put together says the Fed's getting ready. There was no chance, and I said that going in, there was no chance of them lowering rates yesterday. Or 2 days ago. That was off the table. But come September, October, December, those 3 meetings, I feel pretty confident you're going to start seeing rates go down. At least the first one, and then I think you're going to see that trend continue into 2027. So that's where I still am. We will do that poll next. Most likely, most of you disagree with me because every single article I could find disagrees with what I just said. But I've talked to people, that don't go on YouTube and talk about what they're doing with their investments. And I've talked to some people with a lot of money that are pretty good at this stuff that are pretty confident there's going to be rate cuts. So that's where I'm at. Let's change the poll, George. Let's see. So
I'm paying somebody money.
Oh, this really leveled out. So I just want to go through the results of this poll. Bitcoin end of the year price, 60,000 or lower, still won, but it was at 35%. So that means 65% think we're going to be over 60,000. 35% think we're going to be under. That's pretty close to 2/3, 1/3. But that's just still a pretty bearish outlook. And in last place was 70 to 85,000 for whatever reason. 60 to 70,000, 27%. So about a quarter of you think there's a good chance it'll go up a little from here. And then 85 to 100,000, 27%. So a quarter think that as well. So this, like I said, this is all over the place because they are intentionally confusing us to no end. And they are I'm going to show you some articles. Cryptocurrency's dead. Bitcoin's dead. Rotation's out of Bitcoin. Crypto winner. It's the end of the world. And it's just the more of those I see, I think the more likely it is that we're getting, if we haven't put in a bottom, we are bottoming out now. I'm going to end this poll, and I'll let you guys destroy me in the next poll.
Tom, I believe that interest rates are going down next month.
Huh?
I believe interest rates are going down next month.
So, all right. You're even more aggressive than I am.
And I actually took a bet out on that position. Because here's why. Do you know how much money we save in interest by lowering the interest rate? Does not any mother hucker understand that?
It's a game changer, and it's more important than everything else that goes on. Well, housing as well. There's a couple of monumental reasons that they gotta, and our interest rates. The thing that people forget. I'll just quickly interrupt before I post this. Japan just raised their interest rates, right? Their central bank just raised interest rates. They raised them a quarter of a point all the way up to 1%, which, by the way, is a 30-year high for them. So when we've been hanging out near 4, we were over 5 at one point. These are epically high rates. Now, if you want to look at a 60-year window, they're not epically high, but those days are gone. We didn't have $40 trillion of debt when we had 8 or 9 or 10% mortgages and interest rates. This is a different, right? We're 30 plus years into very low interest rate environments. And by the way, we got down to 0 in the United States not too long ago. So this is already we are in a very elevated rate environment. So the thought that we're going to continue to push up rates, whether you think we should or we shouldn't, I think, number one, I think they're boxed into a corner on what they need to do. And number two, I think it's what they want to do. And we'll talk about it. I know that we're going to talk dot plots and all that stuff because they're throwing information at you, but I'm going to talk about my thoughts on that as well. I'm just typing a poll. All right. So, new poll. What will the Fed do with interest rates by the end of the year? Are they going to cut interest rates? Are they going to leave them the same the rest of the year? Or are they going to raise interest rates? Are we going to get rate hikes? We're going to get rate cuts? We're going to get, or none of the above, and we're just going to stay the same. And then I'm going to tell you what the market thinks what the futures are pricing in, what the prediction markets are pricing in, and what every analyst across the board is talking about, because there's pretty much unanimous on the talking points on this one. Excuse me.
I thought you were better.
I am better. That was literally just water going down the wrong way. I am better. For those of you wondering, I had sinus infection. I'm done. I'm done with that nonsense. All right. So
Doug is betting me. I'll take that bet. Here's what I'm doing. I'm betting every single month till the end of the year. Either I'm going to lose a lot of money, or
either you're going to lose a little money, or you're going to make a lot of money, because the odds you're getting are phenomenal.
They're unfathomable.
Yes, they're unfathomable, and we'll go through that.
You're losing that money. Come on, man. Well, I mean, to me, I don't know if you guys are in the real estate market at all. I kind of built some houses. I kind of have a couple houses. I just got one sold, but I had to come off my price 12%. So things aren't moving, but they got to be a better deal.
Well, and that's, again, right. That's a part of this. If interest rates are elevated like this, people don't. Do the math. Get a mortgage rate payment calculator, and do the math on a mortgage at 3% interest and at 6% interest, and see how drastically that changes your monthly payment. Because remember, when people go buy a house, they don't buy it for $300,000. I mean, obviously, technically they do. But for the majority of people, they buy it for, right, how much? Oh, that's $1,800 a month. I can afford that.
I can afford that. Yep.
Oh, that's $3,600 a month. I can't do that. I can't do it. I don't have the money. Also, the bank's not going to lend me based on banking regulations and formulas, the bank's not going to lend me the money even if I want to do it. They're not allowed to. Here in the United States, it becomes, illegal.
Well, and here's the other thing. If Trump or anybody cares about the middle class, they are going to figure out a way to lower interest rates.
I agree.
I'll even go as far as say this: if they do not lower interest rates before August is too late. They don't win the Senate. I mean, the House is almost guaranteed. And that's what everybody tries to do. I mean, that's what this is all about.
Well, there's obviously, you're right. In addition to everything else we just talked about, there's the politics of it, because in the United States at the moment, we're about to enter the season of politics. And to some extent, for some reason, somehow, every single day for the last 10 plus years has been the season of politics, whether you're talking about investing or sports or the weather. Somehow it's political. So that is not a good trend. And let's only hope that that ends sooner than later, because.
And here's the other thing. And guys, I predicted this pain. Tom and I have been talking about this. We thought this would be, well, at least I did. I'm not going to speak for you, but I thought we would be this way up until the 4th of July. And then that is going to turn, and it's going to be the tale of 2 years. I think the second half of this what economy is going to go gangbusters for the next six months.
So George has been consistent on that since before this year started. Late November or December, George said next year is going to be a tale of two halves, a nightmare and a dream, if you will. First half of the year is going to be ugly. Second half of the year is going to be great. So you have consistently said that, and for crypto, it's playing out that way.
And I can see how there's outside influences out there right now trying to make that narrative not come true, just so you know. There are outside influences like you wouldn't believe that are trying to make the United States not do what Trump, says the investments are supposed to do and for the growth that's supposed to come.
Trigger warning. You said the T word. I had to put the trigger warning up there. Explicit content.
It is, nothing has changed from this statement. And I forget, Tom will tell me which president said this, but it's trickle down economics. And it always has been trickle down economics.
Oh, now those are.
Yeah, but one of the things is, trickle down economics means it has to trickle, because if it doesn't, then guess what? It doesn't work.
That was one heck of a buzzword for a long time. And it was George H.W. that kind of had to eat his words on that, because when he was running against Reagan to be president, he was criticizing the concept of trickle-down economics, but he then became Reagan's vice president and ended up singing a different tune. But that was a long time ago. Yeah, I think the T word gets you banned, but I think you're still allowed to talk about Ronald Reagan, right? He's like a Bill Clinton. Those guys were in the middle.
Oh, yeah, they were legends.
Yeah. And an Obama, right? Those are the people liked those guys. I think.
Well, and supposedly the Strait of Hormuz was closed down today again for some reason.
I got some articles on that. It's a good thing the market wasn't open today, because this would have been a roller coaster. You want to just quickly go through that, because oil's a big deal. So first of all, here's oil, because although everything's closed in the United States, oil still trades. This is a world commodity. So oil's trading at $76.50, up 0.5%, or a little almost 1% today. So in the mid 70s, remember, let me go to my oil chart.
Oh, Tom, we're being called out.
What's the matter?
Who gives a fuck about the Fed and politics? Shame on both of you.
I'll tell you,
it has nothing to do with investing. Politics and Feds, they had nothing to do with investing.
For those of you who want to know the answer to that, is anybody that's investing better care about what the Fed does, because it is by far the number one thing that has affected investing over the last 20 years. So that's why we're talking about it. Yes, we're going to talk about all the miners. We're going to talk about everything today. We got time, but we can't ignore what is driving. This is the driving force behind whether we go into a good economy and a boom cycle, or are we about to go into a recession and inflation, or hyperinflation, or stagflation, as people are putting back on the table all of a sudden, right? That's got absolutely everything to do with your investments. And so that's why I'm talking about it. I don't care about the politics. I care about, this is not tangentially adjacent to what we're doing. It's front and center. This is one of the most powerful forces in the world of investing. So, if we're here to talk about investing, this is what's happening. And this was, also we got a new Fed chair, which we only get, once in a blue moon. So
there's only been, 8?
And this Fed chair came in. Now, he told us this before, but he has a drastically different point of view than his predecessor, Jerome Powell in specific, but really pretty much almost anybody that's ever run the Fed. He has a very different concept. And he has said some of the things I've been pounding the table on. I'll tell you something right now that he called out in specific that I've pounded the table on this channel. The jobs numbers are a joke. He is sick of all of this guidance and using data that, right? He said what he talked about was, well, maybe I'll trust the job numbers after the third month of them being adjusted. Right? And I would put a caveat on that. I still don't trust them because remember, the last 2 years in a row, even after multiple adjustments each job number gets each month, they still adjusted the job numbers for the year by 1 million they were wrong by, plus or minus. So this is what he's talking about. Stop looking at the noise. We had this conversation last week. Stop looking at the background noise, the shiny objects, the nonsense. Jobs numbers. Who here doesn't think job numbers are a joke? We had 1 month where we thought it was one of the great months of all time, and then they revised it that we actually lost jobs. That's how wrong the job numbers are. So for the Fed to be looking at that when they're making policy is ludicrous. And he said so. And that is a big difference. Right? That's one of many differences that the new Fed is going to have from the old Fed. Sour Melon Gaming is saying, I'd love to hear why the 20% of people here think the Fed would hike rates this year. And I saw earlier you said you were shocked by these results, and I wasn't sure which way you were shocked. I'm actually shocked that only right now it's at 17% say that they're going to. So we got I'll say it, we got a smarter audience than the general public because this is not the percentages of the public. It's not what's built into the Fed futures. It's not what the prediction markets are betting. And it's not at all. Find me one talking head that isn't saying that the main risk right now is that we're moving, the new Fed is hawkish and we're moving into a rate hike environment. That is the consensus, almost to a person. And somebody said, you forgot to mention the Fed appointed task force to collect more accurate data and hence 3 months later. So, right, there's a series of task force. They're going to revisit all of these Fed policies, a lot of which are somewhere between outdated or never made any sense in the first place. And they're going to take a look at them. So he did say, it's going to take between now and the end of the year. Don't expect me to come back up here at the next meeting and say, okay, we've reached a conclusion from all of our task forces, and here's what we're going to do. They're going to methodically try to nudge this in the right direction. And he also said something that for some reason went largely unnoticed. Oh, thank you. The bank is open. Thanks for being a member. Thanks for the super chat, and thanks for reminding people to smash the like button. It does help us out a lot, and I can see it has helped. It has helped spread the word on this stream. So it's much appreciated to all of those that have done that. If you just got here, or if you haven't smashed the like button, if you're willing to, that does help us a lot. The other thing that he said is he does not view this as a binary situation where it's either runaway inflation or a job crisis. And I got to pick which one I'm going to focus on. He said what everybody says. The Fed has a dual mandate. It has an obligation to take care of both of those things. And the unspoken reality is they have a mandate, multiple mandates well beyond that. But their two stated mandates are to control inflation and to keep the job market healthy. Well, he believes he can do both of those things without having to use the old bag of tricks, without being shoved into, one particular, this is how it works. So I think he gave a lot of unspoken signals to try to explain to people, I don't think raising rates, well, they weren't unspoken. He literally said, AI has changed the economy. We are going to be a more efficient economy, period. That is going to drive inflation down. I don't need to raise rates to drive inflation down because we are going to continue. Yes, we will grow, but an overheated market in the past meant, you're going to get inflation and you're going to need rate hikes to counterbalance that. And he said, I reject that narrative. He said that before he ever got into office, and he said it right in the first press conference. I reject that narrative. The economy's changing, and that's just not how it works anymore. And Alexander said, I am much more hopeful about Fed this week as opposed to the last 4 months. Well, that's good to hear. So, and this poll is going surprising to me. So I'll try and wrap this up because we do have so much else to talk about. But I want to show you guys a couple of things. Number one, right now, for the July meeting, the CME Fed Watch tool, which essentially extrapolates what the market thinks, is at 38.5% chance that at the next meeting, not by the end of the year, at the next meeting, the Fed's going to raise rates. Before this Fed meeting, by the way, this number may be too small for you guys to see. This was at 8% 3 days ago. And then after Kevin Warsh spoke, it jumped to 38%. So anybody that thinks there's going to be a rate hike at the next meeting, good luck is all I can say to you, because that is a scenario that I can't even fathom. By the end of the year, 350 to 375 is at 10%, 90%. 90% priced in that a rate hike is going to happen by the end of the year. So on our poll here on this channel, you guys think 17% of you think there's going to be a rate hike. Right now, the Fed Watch tool is saying the market is pricing a 90% chance that we're going to get at least one rate hike, if not 2 or 3, or some people thinking maybe 4. And I'm talking 25 basis points. So those could come 2 at a time by doing a 50 basis point rate hike. But there are people pricing in 100 basis points of rate hike, and a 90% chance that we're going to get a rate hike by the end of the year. And I'm just telling you, I'll be shocked if we get a rate hike between now and the end of the year. That's it. And here, this is the last thing, because I said I was going to do this, so I want to tell you, for all the talking heads here, Federal Reserve holds interest rates steady and hints at a rate hike later this year. These are various headlines. This is NPR. Live markets. Fed holds rates steady but makes a hawkish turn as Warsh takes over. This was every headline. So I'm not going to show you 500 headlines, but what I will show you is a headline that's a few days older than that. This is before the meeting, right? So this article came out before the meeting. So here's what the market thought before the meeting. This is CNBC. This isn't some fringe thing. Kevin Warsh's Fed is not expected to make any changes to rates for a while, according to CNBC Fed survey. But here's the survey points. CNBC Fed survey respondents see little action taken by the Kevin Warsh-led Fed through 2027. However, 88% do expect the central bank at this week's meeting to remove the easing bias in the statement that has signaled the Fed's next move would likely be a rate cut. So I don't know what world they're living in, but that language was already out of there. But here they're saying, we expect them to turn hawkish. So We expect no rate cut. We expect them to turn hawkish. This is before the meeting happened. The survey participants generally support Warsh's call for less talk from the Fed. So they knew he was going to do. By the way, the dot plots, I won't do it. Maybe at the end later we'll circle back around because some people are probably tired of this conversation. The dot plots. So once a quarter, every member of the Fed plots out where they think they each get their own dot for the year 2026 that we're in, for the year 2027, for the year 2028, for the year 2029. So the dot plots got dramatically more hawkish than they were 6 months ago. Kevin Warsh said two things about that. Number one, he said, people were handing me their dot plots and they wrote them in pencil. You know, the kind of pencils that have an eraser on them. So that was a direct shot. Number two, he did not do, there's no dots for Kevin Warsh. He said, I did not participate in that. I did not do the dots because I think they're worthless. We are not going to be a Fed that is in the business of giving guidance or predictions. We're going to be a Fed that watches what's happening and acts accordingly. And he specifically said, you know, one of the things that should help the Fed is to watch the overall market's reaction to events in real time. But right now, the overall market's reaction isn't to what happens in any given circumstance. It's through the filter of, and this is his words. He said, people don't judge what happened anymore. They judge what's the Fed going to do because this happened. So now we've lost an entire data point because instead of figuring out what the people think, what the masses think, what businesses think, all we're getting is a reflection of what they think we think. Well, that's not helpful. So they're not going to do it anymore. So here is every single thing that people came out today and said, I am shocked that this happened. I'm shocked that this happened. I'm shocked that this happened. And I'm shocked that this happened. Well, CNBC led with this all before the Fed meeting ever happened. I'm going to leave it at that because I'm sure people have had enough. But I think it's important because, and I applaud this group. We have, so here's I'll close out this poll. 43%, that's in first place, think the Fed's going to leave rates the same. So I wouldn't be surprised if that happens between now and the end of the year. I think they're going to cut rates. I would not be shocked if they end up leaving them alone. 19% in last place is raise rates. So whereas the market has a 90% chance built in that they're going to raise rates, we here have voted there's only a 19% chance. And 38% chance there's a rate cut. And you'll notice the other thing I didn't talk about, if you look at this chart, there's a 0.0% chance built in to the futures that the Fed will cut rates in 2026. 0.0%. I'll just leave you guys to ponder whether you think that's reasonable or not. This poll,
I don't think it is.
38% of the people in the poll think there's going to be a rate cut. The futures are pricing in a 0.0% chance. By the way, once you get 2, 3, 4 meetings out, these futures are so wrong historically, it's ridiculous. So that's my thoughts. You're not going to get a lot of guidance. You're not going to get a lot of talk from the Fed. And I personally applaud that hugely because these days that we have now, here's my one thing I'll miss. This was always my biggest buying days of the year because every single time Jerome Powell talked, the market just went down in a straight line. And then I bought a bunch of stuff. And then in the next anywhere from 24 hours to a week, the market was back where it was doing its thing. So we're not going to get that probably in the future. People aren't going to be able to sell this, I need to panic, although they're trying to do it right now with this meeting right here that happened. I would be careful. I bought a lot on the pullback. That's all I'll say, more than my normal buying. And those are my thoughts on the Fed meeting. And those are the realities. And take from that what you will. You know, obviously a lot of that was my opinion, but some of it I showed you articles that were written before the meeting ever happened. None of this was a surprise. It was headlines before he did it. So we'll end that poll. I will move on because we have many other things to talk about. Closing thoughts on that one, George?
No, move on.
Move on. All right. So
Kill. Somebody said that they had a good day in Canada today. Hey.
Well, let's see that. I saw somebody say that in the comments, and it wasn't just a good day. They said it was an off the charts day. So is it still Bitfarms in Canada? What's going on?
It could be. It was a different than Bitfarms. It was.
Anybody know the ticker in Canada?
I'll look it up.
All right, we'll have George find that, and we'll see. Yeah, that'd be great if Keel ran today. I have not sold a single share of any of my Keel, so I still think the $5 to $10 thesis that I have is intact. And then I will be taking profits. There's a point I'm going to take profits. Right? 660. This is their chart right here. You can see we got. Oh, this is IREN's chart. Let's get to Keel's chart. Okay, so I went through this. I'll briefly talk about, you'll see a little pattern here, 3 sides of a rectangle. On this day, Keel announced what they ultimately ended up doing was raising $458 million through preferred convertible debt, not preferred debt, convertible debt, which is potentially dilutive. So they got wrecked, down 18% on the day. At one point, yeah, that was to the bottom. So we talked about this on the members only. To me, and it depends on the company, I'm going to show you an example of the opposite of this. When you have a good company that you already know, a part of their thesis is we are capital intensive, we're going to be raising capital, and we're going to deploy that capital to make future revenue. So when they do that, what you really hope, is they do it when they're very near their 5-year high in their stock price. Right? Because then the dilution effect becomes much smaller than had they done that 2 months earlier. They were at $1.87. No, they didn't dilute at $1.87. They waited until they got up to $6. And then they still didn't dilute. It's convertible debt that may never be converted. And they did cap calls to cap how much dilution this could be. So I bought a bunch of options down here. So this is not financial advice. And if you don't deal in options, then, please crawl before you walk, walk before you run. You can lose a lot of money in options. But to me, these are simple ones. I bought options right here, and I have not sold them. But you'll see, within a week, this was up 20%. So when the stock is up 20% and you buy an in-the-money option, you're up a lot more than that. At one point, I was up 100% on this. It's a little bit less than that right now. I think it will be a lot more than that by the time I sell them. All of that aside, I do think that Keel is going to break out of this $6.60 area. By the way, this is a 5-year high for them. This goes back to November of 2021 is the last time they were this price. So they ran up in October of 2025, then they pulled way back, massive buying opportunity, and now they've run way up again. But the thing is, there's a story behind this, right? They've dramatically changed what this company does. They also re-domiciled to the U.S. They're also putting in a significant amount of time with, I'm going to draw the line right here, right now, because this is the second half of my thesis. You'll see none of their daily candles closed below $5. So, and now they're not even near $5. Being a U.S. domiciled stock that's consistently over $5, there are trillions of dollars of institutional money, of retirement money that are in funds where it's against the rules. It's not against the law. It's against the rules for those funds to invest in a company that doesn't meet those two qualifications. Well, on April 1st, and surprise, surprise, that was their bottom, right? From April 1st forward, this stock's gone up pretty much in a straight line until they raised $458 million. It went down and came right back up. So now it did the first thing. It re-domiciled to the U.S. That opened a lot of doors. The second thing is it is now over $5. I think it's going to maintain this. And as it does, and within a short period of time, there will be more money. So that is my $5 to $10 thesis. I think that's a 90-day type of a thing. By the way, $10 would be an all-time high. $9.36 is where this stock reached in November of 2021. And so that would take out the last cycle's high. There are several of these companies that have already taken out the high from the last cycle. Keel has not done that yet, but it is hanging right around a multi-year high. And you can see, we could get a bullish crossover on the MACD on Monday. We might not, don't know, but this is the direction it's trending in. Yes, we're very high on the RSI. We're at 68, almost 69, but we were just at almost 85. So we always talk on this channel, if you are new here, for high growth stocks, for high volatility stocks, 70 is the benchmark for starting to be overbought, meaning you're likely to get a pullback or some sideways activity. But I use more 80 or 85 as that number, depending on where you're at in the cycle with these high growth, high volatility stocks. So I think there's a lot of room to the upside for them to break their new high, then maybe do some consolidating, come back and retest some support, and then take the next run up. That's what I think is going to happen. I think at $7.50, I will start to sell some of my Keel. It's a very big position for me, mainly because I patiently dollar cost averaged in over time. And despite the fact that this stock still is not back to where it was in 2021, I'm up like 350% on this stock. So it will be time for me to take some profits. I'm not going to, bail out in one day. Hopefully, if things go the way I plan, I get to ease out of a majority of this position, over the next 12 months. We'll see what happens. Those are my thoughts on Keel. I'm bullish on Keel. This is not my number one conviction play in this industry. But I do think it structurally is set to run.
Run like the wind.
Read the comments, Tom. It should open over $7.50. So I'm not talking Canadian. This is U.S. dollars. For those of you who think somebody in the comment is saying I'm talking Canadian dollars. These are U.S. dollars.
By the way, you know who did better than Keel today?
Probably your buddies over at Hive.
Yeah, baby.
George is a Hive holder.
I am a Hive to 100 holder.
Monday, June 29th, Keel will be added to the Russell 2000. Thank you. That from Milligs, if I pronounced that correctly.
Yeah. We call this episode the inverse of sour melon gaming.
Yeah. So Brett is letting us know that Keel hit $10.84 Canadian and $7.65 US dollars on the Canadian stock exchange because unlike the United States, Canada was open and trading today, and several of these stocks are listed on multiple platforms. So, you know, it's nice to get an insight into some of the Canadian companies still trade on some U.S. holidays. And so that's really good to hear. So I can just tell you, if that holds and we break 750, I will take some profits. That's been my plan. And so that's what I'm looking at. And it's very encouraging. But I do think at some point, you know, taking zero, once you're up 400, 450, 500%, and you've taken zero profits, you better have unbelievable conviction in a company. There are instances where that can happen. But for me, this is not one of them. It'll be time to take profits, in my opinion. But I do think only good things ahead are for Keel if they execute. And I think that Ben is going to be a person that executes very well. That's my opinion. We'll see what happens. They got to prove it, right? There's no doubt. Sourmelon Gaming said Keel's got a lot of money to raise, not bashing, but just be aware. And that is true. They just raised $458 million and they're not done. So every time Keel has a huge run, I think you can expect them to wait. You know, I don't know where they're going to run to, but if they hit $10, they're probably going to go get more money. And that makes sense because remember, this stock was trading with a one handle 2 months ago. If they can get to $8 or $9 or $10, that's when you want your companies doing their, and it's not even necessarily dilution. There's a lot of terms that come along with these convertible shares. A lot of them may never be converted. So I like what's going on there. I think that's a good story. And again, it's not my highest conviction play. You want to do a round robin on where everybody is at on these stocks, and then I'll show you what these stocks did this week.
Do it, Tom. I'm sorry.
Oh, no problem. Just going to do a quick, and then we'll do kind of a round robin so we can get all of these in here. Okay, so this is the first group. Of these four, and we'll do, I think there's 11 or 12 of these that we track, which is the best investment at today's price? So remember, a lot of these have had big run-ups. Like if I go through, in the last couple of months, Keel's up 240% in the last, 2.5 months. So that's a big run-up. Doesn't mean it may still have a lot more to run. And I think we saw today being added to the Russell is going to give them another big boost. So we'll see. So let's go take a look at what the stocks did do this week, because it was actually a pretty green week for these stocks. And one of the things I'll comment before I pull the chart up is these stocks are no longer tethered to the performance of Bitcoin. So for years, the number that I would look at obsessively was, where's Bitcoin at? Because, I owned 6 Bitcoin mining stocks, and they typically, and not every single day, always, but they typically traded in tandem with what Bitcoin was doing. So that is just not true anymore. And it's not true for obvious reasons. While some of these still have a big part of their energy going into mining Bitcoin, even those companies are allocating resources into, securing power and creating data centers for high performance computing. I do think there will be a time where Bitcoin mining is a part of the narrative again. I don't think Bitcoin's dead. So that's another conversation. We'll have that because a lot of people are saying, the Bitcoin economics will never be good ever again, and Bitcoin mining is worthless. It's kind of been true. This year has been a brutal year, and I'm gonna get to an article on that. But first, let's go look at what these companies did this week, this month, and this year. Okay, let's start at the beginning. This week. So remember, in the United States, today was a holiday and there was no trading. So this is as of the end of the day, Thursday. CIFR up 19%. So I should start by saying Bitcoin you'll see in yellow or gold, down 1%. So Bitcoin pretty flat on the week, a little bit down. CIFR up 19%. Hive, to George's point. Hive's had a great run. It was a lagger, and now it's on fire. Hive was up 14% this week. Keel was up 13%, not including whatever they did today in the Canadian market, which is likely to be reflected Monday in the U.S. markets. Yes, I see somebody reminding to smash the like button. Where are we at? Do you know, George, on likes?
Hang on, you got to update it. Ring 59.
59 likes. This is one of our worst ever. We're going for 100 likes. We've been going for 150 likes, so do us a favor if you would. Smash the like button. It's free, and we appreciate it. And special shout out and thanks to all of our members. As always, we appreciate you guys showing up and having a good conversation. All right, so almost everything in the green this week. CIFR, Hive up 14%, Keel up 13%, TeraWolf up 11%. Hive had some news. We're going to talk about Hive's news because Hive is not the same as the other three of these stocks that ran. Sorry, this one was Hive. CIFR is now turning into a pure play data center power high performance computing company. Keel has already said we are phasing out of Bitcoin mining and we will be 100% out of it before the 2027 ends. I think it'll be a lot sooner than that. So this isn't even a Bitcoin mining play at all anymore. TeraWolf, really, if you look at them, they almost never really were. This was always about power and data centers. So 3 of these 4 are already heavily focused on data centers. Hive had some news, and not surprisingly, it was an announcement regarding high-performance computing. And so as a result, even though out of all of these companies, other than ABTC and Microstrategy, which is not a Bitcoin miner at all, that's a treasury company, out of all these companies, Hive has by far the least invested in high-performance computing. Now, they've been in it the longest. They've been talking about this forever. But until recently, they had done almost nothing about it. That changed. They made a very big deal earlier this year, and now they just made another announcement that we might as well go look at right now. A couple of announcements. Hive shares jumped 10% on a $220 million Canada sovereign AI infrastructure deal. So here you go. Here's your AI infrastructure deal. GPU cloud contract with Bell and Cohere strengthen Hive's shift from Bitcoin mining to high-performance AI computing. And this is worded not properly. It's not really a shift from one to the other. They are doing both. Because remember, Hive spent all year last year increasing their Bitcoin mining hash rate by 500%. So it's not like they got out of the Bitcoin business. They finally got into it in a very serious way last year. Now they're trying to get serious with a couple of big contracts here, big relative to what they've been doing, very small relative to what a lot of the others are doing. But this was big news for them. Here's Frank. And so this was their news for the week. They also announced Hive Digital Technologies to acquire 32 megawatt data center in Boden, deepening an 8-year community partnership in northern Sweden. So this is where they've operated out of. They're going from a renter to an owner. This is 32 megawatts. So they're getting vertically integrated over there. They're going to own this thing. That was not the big news. They moved on this news. They got a $220 million AI infrastructure deal, and the stock moved really well on that, as it should. So, Core Scientific up 6%, Riot up 6%, HUT 5%, CleanSpark 5%. Then we had some stuff hanging around near zero. Marathon +1, BitDR +1, IREN 0, Bitcoin -1, ABTC -1. Microstrategy got wrecked. This is why, and I don't, maybe Monday's not the right day to sell it, but I am looking at it thinking it may get worse before it gets better. And I'm at I'm $2 over break even right now. By Monday, I could be upside down. So I'm seriously considering, I'm not telling you guys what to do, not financial advice. I recently bought a position in this, and I am, I guess, fair to say, regretting that decision. Because I took a little roller coaster ride. For the first 3 weeks, it was off to the races, and it's just been pulling back all the way to almost break even ever since. I may get out and put it in something else. We'll see what happens. I'll let you guys know next week. Anyway, that was a massive underperformer. ABTC was the only one in red, but IREN wasn't far behind it. I think that, so to me, the stock, I will tell you guys that I think is the biggest bargain right now, that I have the highest level of conviction in, is IREN. I think that they are doing a price consolidation right now. I think there's massive upside to this stock. Goldman Sachs came out a month ago and gave this stock a horrible rating and a $50 price target or something ridiculous. And pretty much everybody else is giving it between $80 and $100 price targets. And that's where I think it's going, sooner than later. That's my opinion. We'll have that.
I can step out for a second.
All right. So this is week to date. Month to date. This month started out awful. I will remind everybody that May was phenomenal. So before I look at June, let's just remind ourselves. Hive was up 88% in May. Keel was up 87%. HUT, this is in 1 month. HUT, 65. And this is why those RSIs get overheated going in both directions, right? You don't have a month where you're up 88% and you're at 70 on the RSI. No, you get into way overheated territory. But the good news is, right, they're still moving this month. So last month was fantastic, but let's look at this month because some of these are a different story. You've got Bitcoin down 14% so far month to date. There are two that are trailing that. ABTC is down 25% and MicroStrategy is down 29% month to date, taking away most of my profits since I bought this, unfortunately. This is not a gigantic position of mine. It's a small position that I open, but every position is meaningful and you don't like to lose money on stuff. And I will tell you guys, I sold Hive stock and bought MicroStrategy or Strategy, TerraWolf, and CIFR. So, as Meatloaf said, 2 out of 3 ain't bad. TeraWulf and CIFR are up more than 100% since I bought them. But Microstrategy is basically break even right now. So that one, to me, I think it's time for me to just chalk that up as a bad move and move on. And Sourmelon Gaming saying IREN should be well about $100 right now. It's quite shocking. Yeah, I mean, I agree. The first thing that I think is 75, just from a technical standpoint, when it goes, it's going to go straight to 75, in my opinion. And then I do think, we'll see if it has to consolidate a little. But I do think $100 is a super reasonable price target for this in the short to midterm. So I haven't sold a single share of IREN. And I'm not selling it at 50. I'm not selling it at 60. And I'm not selling it at 70. I might sell my first little bit at 75. But I'm not going to, that may be time for me to start taking profits. And this is one of those where I talked about earlier. I was very fortunate to get into this stock. And some people are in better than I am because this stock was very low. I got in at $6. It's at 60 right now. That's already a 10x, and I haven't sold a single share because this is my highest conviction play. But I do think I'm getting very close to the point where it doesn't make sense to take no profits at all. So everybody has different entrance strategies and exit strategies. The only thing I would say is, no one's here to say anyone is right or wrong, but I would say you should have a plan. If you've entered a stock, you should have an exit strategy. Unless you're talking about, there are some blue chip stocks that people buy and hold for 20, 30, 40 years. They put it in their retirement account. The stock market is working less and less and less that way. It is a stock picker's market, and that's just what's going on right now. And Brett's saying Microstrategy turned out to be a total house of cards. Government PSYOP. So I don't know that I'm willing to go that far, but I am willing to say, if we go look at this, and I'm going to take a look right now because you'll see, this is the loser on the month. So let's just talk about why. Just looking for the tab. Find. Where'd you go? All right, I'm going to have to reopen it because I don't see it. I think we took a brief look at this. This is the problem for Strategy's common stock, MSTR. This is their preferred stock. They call it Strike STRC. This is how they've been raising money to buy Bitcoin. And they have been buying Bitcoin hand over fist. Yes, they sold 32 Bitcoin. I'm not even going to get into it. You can make whatever of that you want to. They own 840,000 Bitcoin. And the 2 subsequent weeks to that, they bought about 1,500 Bitcoin a week for those 2 weeks. But that 32 Bitcoin sale marked, you could mark the date down. This stock started tanking on that day. I guess everybody thinks when you own 840,000 Bitcoin, if you sell 32 of them, you've changed your overall strategy as a company. Again, it's probably obvious how I feel about it. The point is, this is, if I go to, so you can see, this got down to $83 yesterday. This is the one day. This got down to $83. I'm going to go to the year to date. Actually, I'm going to go to the 1 year because that's the entire existence of this. This has been around for less than a year. This is where this is right now. This is at 88. Remember, it got to 83. This is far lower than the lowest it's ever gotten in the history of this stock. This bounced off a 90 right on this day and closed at around 93. This bounced off of on this day 93 and closed at around 93. So that's about as bad as this ever got. This got to 83. And remember, par is 100 on this. So, and look at how long this just sat at 100. And you can see 100, and then they did a dividend. It went down to 99, and then it went back to 100. And then they do a dividend. It goes down to 99. It goes back to 100. This was clockwork, and now it's not. It's a broken clock now. And this has to fix. So that's why until enough money goes into this to get this back to par, I just don't know why anybody is going to be putting money in this, which is their common stock. And I think that is why you'll see, this stock has been absolutely tanking. Since they sold that Bitcoin, this has been just down. It did have a little bit of a decent couple of day run and then right back down. We're at $112 from 165. And if I go a little further than that, this was almost to $195 1 month ago. So it's down almost 50% in the last month. When, Bitcoin's down, what was it, 14%? And this thing's down 50. So this is getting wrecked. And the reason I'm considering getting out, even though, it's on a big losing streak, I do think until the other one gets fixed, I'm worried about this one. So I don't know what to tell you. Not financial advice. You guys can weigh in and tell me what you think. Let's move on to the next group of four. Keel and Marathon won this very close. BitDeer was very close, and I'm going to talk about BitDeer. They had some news that I think matters. So let me close this out. Sorry, BitDeer, you just missed.
BitDeer is terrible.
Well, you wait until we go through the article and then tell me what you think.
Okay.
Let's get the next group. Who else? Okay, so the next four, we got Riot, CleanSpark, TerraWolf, and Hive. So the winners of these brackets will have a finals match to see who the overall winner is. Let's go look at what BitDeer did. Okay, so they are one of the few, the proud, the last remaining major publicly traded Bitcoin mining companies that are putting out a monthly operation. The only two that I look at, there are one or two other companies that put them out that I don't really follow because I feel like structurally those companies are so radically different than the companies we're looking at. It's comparing apples to oranges. So with that said, it's really just down to CleanSpark and BitDeer that are talking about their Bitcoin mining, that have the audacity to mention Bitcoin, which is like, that's a 4-letter word right now in the investment community. But on the flip side, this is their May production report. I think all these guys should put these reports out. Now, the ones that are abandoning Bitcoin, I get it. You're winding down your Bitcoin operations. What is the point of updating people monthly on a segment of your business that you're closing. But Marathon's not closing this segment of their business. They should give us a monthly operational report, in my opinion.
I want to know how much they mine of Casper.
I know we don't hear a whisper about that anymore. Well, we don't hear peep out of Marathon these days. And Riot still mines Bitcoin, and Cleanspark still mines Bitcoin, right? Cleanspark had 50 exahash. I don't know how much they're running each month because they don't put a monthly operational report out. Well, Cleanspark does, but Marathon doesn't. Riot doesn't. Nobody else does. So let's talk about BitDeer. BitDeer got 921 Bitcoin in May. So, to me, that is a grand slam home run. This is the best month anybody's had in years since the halving. To compare, get down. Last month, they mined 783. That was a monster month. This month, they crushed it with 921. So I know nobody at the moment, nobody cares about Bitcoin. Nobody cares about Bitcoin mining. However, I do believe that Bitcoin is not done. And when it rallies, these guys make their own machines. They, if they're not already, they will shortly be the most efficient fleet on the entire Bitcoin mining network. And they're getting vertically integrated, and they're getting into AI. Now, they're slowly getting into AI, I will say. So you've got 921 Bitcoin, an increase of 370% year over year. Self-mining hash rate, 70.2 exahash. They do some co-mining with 10 exahash. I really don't even care about their co-mining. It's not an important part of their business, in my personal opinion. But 70 exahash, right? Nobody's reported more than that. And nobody's reported 921 Bitcoin mined in a month. That number's off the charts. So this was a giant winning month, in my opinion, for BitDeer. They go through a lot of info here. I'm not going to take piece by piece through all of this. You can read this report if you want. Seal Miner's recent launch of Seal Miner DL1 Hydro, designed for script algorithm mining with BitDeer's proprietary ASIC technology with hydro cooling thermal management system. So remember, they make their own Bitcoin miners. They make their own machines. So they're vertically integrated in a way that others are not. AI cloud deployment and production launched of 2 units of NVIDIA GB300 NVL72 clusters, further expanding BitDeer's AI cloud's advanced GPU infrastructure. So they are in the GPU business. They are in the AI hosting business, but they're not all in yet. I'd like to see a lot more improvements on BitDeer on that front. They are still by far, and you can see in their production, they're all in on mining Bitcoin. But they are diversifying, so I think that's worth noting. So if I go back, let's go back to, so this is the month of June. So remember, May was off the charts. CIFR up 23%. CIFR continuing to run this month. TerraWolf up 13%. So remember, these are the other 2 things that I bought when I sold Hive. So Hive's been on fire. And, the third thing I bought was MicroStrategy, which is not working out well, but these 2 are doing quite well. Keel, which is one of my personal bigger positions. Again, not financial advice. I'm just letting you guys, those of you who have been here a long time, you know which ones I'm invested in and which ones I'm not. So they're up 11%, and that does not count what they did today. So if what they did today holds, they're about to get another pretty big move to the upside. So that would be really nice to see.
Isn't it amazing how they can fluctuate so much in price?
This is the land of volatility. You know, we've been saying since we started, if you can't handle volatility, this is not the right industry for you. And the industries actually even shift from cryptocurrencies monumentally volatile. The Bitcoin miners were usually more volatile than Bitcoin itself, and they have not lost any of that volatility because AI is running like the wind. People are looking for AI infrastructure choke points, and this is one of them. So I feel like I was late in some of the other areas to the AI game. However, I am up 1,000% on IREN. And, you know, that's not on their Bitcoin mining. That's on AI. So, you know, I consider myself fortunate that these companies did pivot when they pivoted. I don't know what we would have done, you know, without that pivot, if we would have been moving away from this altogether long ago or not. But a lot of these companies have been talking about data centers for, you know, 2.5 years now. So it's not like this is a new development. What is new is the rest of the world is now looking and going, oh, there's several choke points. There's several problems in the supply chain for AI, and data centers is one of the big ones. So there have been some famously high-profile investors jumping into some of these companies. And I don't think the run is over by any stretch of the imagination. That's my opinion. Okay, so Riot, you know, pretty sideways this month, up 4%. BitDR up 3%. HUT is 0. Marathon's down 1%. IREN, Cleanspark, and Hive all down 6% on the month, although Hive is up big this week, and if they had a nice move today, this may have moved them green on the week for all I know. BitDR's, or on the month. BitDR's down 14% this month. ABTC is down 25% this month. They just can't catch a break, and I'm going to talk about them for a minute as well. Microstrategy, we've talked about completely. They're down 29%. With all that said, let's just look at the year-to-date for a minute. And if you're on a device where you can vote, don't forget to vote in the poll. And I know you can smash the like button no matter what you're on. Even if you're on your TV, if you're on your cell phone, if you're on your computer, everybody's got a like button. So if you'd be so kind, we sure do appreciate it. And right now we're going through which one is the best investment right now, and the 4 choices right now we're on are RIOT, CleanSpark, TeraWolf, and Hive. A surprising result is going on right now for me, George. I'm a little surprised, but we're not done. Let's get some votes in so we can do the last group. Okay, so that's month to date. Let's look at year to date. So year to date starts to tell a much cleaner story. Most of these companies have gotten into AI. There's really 3 different stages. Some of these companies are deep in where they have multiple contracts. They're actually collecting revenue. Some of them are still building out infrastructure. They have contracts, but you know, they're not done with their infrastructure and they're not collecting the revenue yet. Some of them are only now just starting to either buy or build out infrastructure, and they're getting into the game. I say better late than never. I'm not saying every one of these stocks is going to be a winner, but I think some of these are going to be monumental winners. Some of the big winners in the whole stock market, in my opinion. Not every one. Execution, and I'm going to get to that article next. Execution is going to be gigantic because this is much like Bitcoin mining, which is what all these companies were before they did this. This is a capital intensive industry. And if you guys remember the years of disgust on the stock dilution that these companies did. Now, when they were Bitcoin miners and the 2022 crypto winter hit, several things happened. Number one, nobody was lending them money. Period. Borrowing money was off the table. Convertible debt is a form of dilution. People didn't even like that. Secured debt against your Bitcoin, even that was no longer acceptable. Secured debt against your Bitcoin miners. Institutions were valuing Bitcoin mining equipment at zero, so nobody was doing that. So what does that leave you? That leaves you at the market offering equity dilutions of your common stock. And those of you that have been here for a while remember all too well, these companies went from, we were getting upset that they were doing $50 million stock dilutions. Then all of a sudden it was $100 million. Then somebody did a $200 million. Then all of a sudden somebody did a $500 million stock dilution. Then all of a sudden Marathon did a $1 billion stock dilution. I think Riot was right behind them doing a $1 billion stock dilution. And remember, there was a time where every single one of these stocks was less than a $1 billion market cap. For 6 or 8 months during the crypto winter in 2022, these were micro cap or nano cap stocks, right? I'll give you an example. IREN did a 500. You guys, those of you who are members will remember this very well because I complained about it, sold my IREN only to be very fortunate to buy it back later at a great price when they convinced me that they did exactly what they said they were going to do. And what they did was raise, as a $200 million market cap company, they put out a $500 million at the market offering. To me, that was absolute madness. And Sour Melon Gaming's talking about it, I think, I did run for the hills. I sold all my IREN. That was years ago. And then a funny thing happened along the way. They went and built out 50 exahash of Bitcoin mining. Faster than anybody in the industry. CleanSpark was what I would call warp speed in getting that done. They pretty much hit all their benchmarks, and I thought CleanSpark was a superstar until I watched what IREN did. And all the while, at every one of their investor conferences, quarterly earnings calls, IREN was pounding the table. This was also frustrating to me, but it turns out they were way ahead of me. They kept saying, we're not a Bitcoin mining company. We're experts at building data centers. That's where our area of expertise is. That's what we do. That's who we are. And, when I look at a company that has 100% of their revenue from mining Bitcoin and they lead their conference call by saying, we're not a Bitcoin mining company, to me, I'm scratching my head. But guess what? They were right again. So, fortunately, I did decide, you know what? Looks like these guys know what they're talking about. And I got back in and caught pretty much the entire run on this. So, I'm thankful for that. My point being, these were tiny companies doing massive dilutions. There was a time where we considered a $500 million stock dilution as absolutely massive for these companies. Now, they're doing $2 billion, $3 billion, $4 billion. And because they're $8 billion, $10 billion, $12 billion, IREN's a $20 billion market cap stock now. They can go out and raise $3 billion. Right? That's not a big deal for them. And now their stock took a hit, and I did the same thing on IREN. Their stock took a hit, turned around, went right back up. Because, again, this is a company that they have multi-billion-dollar contracts signed, and not with just anybody. They have contracts from, I believe, Microsoft, what has been the biggest company in the world most of the time for the last 20 years. Them and Apple have traded places. And the other one they have a contract with is NVIDIA, which is now the biggest company in the world. And they not only have a contract with revenue for them, but they have a partnership to build out 5 gigawatts of data centers. Now, we'll see if and when and how that happens. Again, execution is going to be key. But if I was to pick the company that has the best proven track record at execution out of all of these companies, I would have to say it's IREN. And that doesn't mean all the rest of these companies are bad. there's several companies that execute very well at certain things. IREN and round 1.0 of IREN, by the way, was a total failure. Before any of this happened, they basically had to hand over the keys and give back all their Bitcoin mining machines and start over. But they made a smart deal. They didn't have to go bankrupt. They got to tell the bank had collateralized everything, and IREN, they did it through some subsidiary vehicle that they got to just.
That could have been the best deal ever.
Right. They got to walk away, start over, and boom, now they're a monster. So they've made a lot of good decisions along the way. Maybe they've got lucky as well. I don't know. What's the difference? So obviously for me, that's a high level conviction play. But there's other companies that I think perform very well. I think there's going to be a bunch of winners in here. Not everybody's going to win. Right? I scratch my head about Marathon, and I'll tell you, somebody I've been watching for a long time. You know this person, George, not personally, out of the blue, in a video where he wasn't even talking about this. He was talking about software stocks. It was a 40-minute video on why it's a good time to rotate back into software stocks, which, by the way, I have been doing for 4 months now, and I agree 100%. Some of them I think are going to take a while to pay off, but there's a lot of companies that I think are beat down for no other reason than the AI is going to replace all software. All software is dead. Well, all software is not created equal, so I won't even get into that. But my point was, out of left field, after talking about that for 40 minutes, the stock he recommends, he says, there's another stock that's got nothing to do with this, but it's my number one short squeeze potential stock in the entire stock market, and I'm investing heavily in it right now, and it was Marathon. Right? Because Marathon is monumentally shorted stock, and it's not the only one on this list. There's a few. I am not a short squeeze type of a person. I don't invest in a stock hoping that it's going to short squeeze. I invest in it hoping it's a good company, it's going to do good things and go up over time and get rewarded for that. But short squeezes are real. And if they get, they now bought a big data center facility. They are shifting into power and data center. And if they get a deal, I would not be surprised. This stock is very, it's lagging very, I'm going to go to their chart. Right, this is hanging out at $14. Now, I understand that's a double from where it was, in 2026. But this was a $30 stock in 2024. This was an $80 stock in 2021. This company is 50 times the size it was in 2021. When it was $80 stock. Now, dilution plays into that as well. So it's not apples to apples, but it's apples to apples from here. They haven't done any stock dilution from here, right? These guys don't really get to stock dilute anymore. That's the Bitcoin miners, that game ran out for them. They all went 18 months where really basically none of them did any dilution. But this company, nevertheless, pretty much crashed. Right, from top to bottom was a 77% move down. Now, to where they are right now, they're still down. They're around 54 or 55% from their 2024 high. That's not their last cycle high, which again, I think was $83. So this stock could pull a double on a short squeeze like nothing. I wouldn't, that wouldn't surprise me at all. Having said that, I will reiterate, I have never bought a stock going, well, this one's going to short squeeze. If I don't have conviction in the company, if it ever does short squeeze, I probably won't be around to see it because, who knows what it does between now and then. So that's just not my deal. But I was surprised to see that person. Can I say who it is, George? Is it all right to name another YouTuber?
Why would I care?
It was, I don't know. I just don't know what the etiquette is. It was Felix and Friends.
No, don't say it.
you just said I could say it.
Felix, really? It's so funny you mentioned his name. He called me the other day.
Did he?
Yeah. He's been bugging me lately.
I will tell you something.
I told him I'm not gay.
I don't think that's why he was calling.
Not that there's anything wrong with that.
Not that there's anything wrong with that. I really, he's gotten a lot better at what he does, in my opinion. Just by 2 cents.
Well, the reason I never did anything with him is because, he has nothing tied to the United States.
He's not from here. He's German. He lives, so, but he talks about U.S. stocks. I mean, he's trading heavily in the U.S. stock market, but he also trades.
He's not talking about me at all, is he?
No, he's not talking about you. He's talking about Marathon.
Okay, well, you never know.
Listen, I don't watch every single one of his videos, but he is one of the people I've told everybody I'm trying to kind of do a little more paying attention to what is being said out there on YouTube so that I have some perspective of what the mob is saying. And I do. So I watch more videos than I used to. And he's one of the ones that I think has come. I think he has a good channel. That's just my opinion. Now he does do a lot of. He's always selling something. But listen, he's got to make a living, so I'm not going to criticize him for that. Anyway, you guys can just judge that for yourselves. But he picked Marathon out of the clear blue. That was a surprise to me. There's some people like Charlie at Zip Trader. He's been talking about drop in the chat if you guys know who he is. He's a very big YouTuber, so I watch his things from time to time. He's been talking about Marathon for 3 or 4 years.
You realize I'm the biggest YouTuber, right? I don't think I've met anybody over 330.
I was going to say, physically speaking, you are by far the biggest YouTuber. And that includes all the genres of YouTube that I watch. I don't watch sumo wrestling.
Get it.
Old Jock said Felix gets Winston to do all the research. I think it's funny. I like it. I think he's lighthearted about it, and he loves his dog, and I appreciate it. That's just me.
He's very eccentric. He's figured out how to win at life. I'll give him that.
He has indeed.
Did he talk about the spy at all or no? Is he still on that kick?
He wants to beat the spy.
I know, but his whole thing was he would every day either short or long the spy.
Yeah,
that's how he makes his money.
He has moved. He may be doing that in the background, but that's not what he's talking about on his channel anymore.
Oh, wow. That's interesting.
Yeah. And Pogo said I've watched them both. So, yeah, I mean, I know those are some of the people that are out there.
Filling out the contract.
And there's positives to, got to take, myself included, you take everybody with a grain of salt, you add it all up, and then you make your own decisions, obviously. So I know our members are very good at being very discerning about the information they take in. Would you say Felix is better than Meet Kevin? I don't want to say anything negative, but I would probably say almost anybody's better than Meet Kevin. Is that wrong with me, George?
Ever since he got that jet.
I don't know what happened to him. I did watch his channel, and I'll give you the one thing. There are still, from time to time, and the Fed meeting day is almost the only time of the year I will ever watch Meet Kevin. Other than that, I have turned him off completely. I don't know what is going on with him. I see his thumbnails. He's got these gloom and doom, ridiculous end of the world stuff going on over there, and I don't know what's going on with him. And if you guys enjoy him, by all means, don't let me, influence you. Go watch Meet Kevin if he's entertaining to you. He lost me along the way.
Gotta run, guys.
All right, George, thanks. Have a fantastic weekend.
We'll see everybody. I think.
All right, so I'm going to end this poll because there's two super clear winners on this one. So Cleanspark rallied. Hive was running away with this. So the top two on here are Hive at 34%, Cleanspark at 38%, which leaves Riot and TeraWolf in the dust. I'm going to just do the last group. So give me 30 seconds to just get that set up. All right. Sure I'm not missing anybody. Oh, I think this will do it. All right, here's your last group, which is IREN, CIFR, Core Scientific, and ABTC. ABTC is the only remaining 100% pure play Bitcoin mining company. All of the rest of the companies that we've been following for years and years and years, some of them since their inception, actually about more than half of them since their inception, all the rest of them have diversified. And I'm going to talk for just a minute about ABTC, and I hope I don't bias the poll while I do that. I am struggling to find a bull case for this company, and I'll just walk you through what I'm looking at. So here's American Bitcoin Corp, stock ticker ABTC. A couple of things to know about this. Number one, I gotta press the button. Trigger warning. I'm about to say the T word. There are the two Trump sons that own a portion of this company. Now, most people think they own the company for some reason. They are owners, but the largest shareholder by a mile of this company is Hut 8. In fact, it is consolidated into their financial statements. They are the major shareholder in this company. But yes, they're Eric and Donald Jr. are involved in this company, and Eric is heavily involved in the company. This is a pure play Bitcoin mining company. It's the only one left. So, right now we're at a pretty bad spot for Bitcoin. And so I understand that this is a beaten down stock. And you may look at it and go, well, it's all the way down to 85 cents. So I'm just going to do something real quick and go. So this stock was at $14 for 5 seconds. But more realistically, this was a $10 stock. Now, we were calling it out every single day. I said, I don't short stocks. I never short stocks. There's just too much risk. If I did so, I would have to cap it with some options to limit my losses. I just stay away from it. It's not my thing. But to me, I thought this was one of the most obvious shorts in the market. This was like a $8 or $10 billion market cap company, and there was just, compared to its peers, there was no sense to this at all. So it was obviously going to have a big pullback. And it did. So when it pulled back from here to here, that was a 65% pullback. But that was only the beginning. So I'm not even going to go from here, right? Let's pretend this didn't happen. I'm just going to go from here. This stock's down about 92%. 92% in 9 months. That's a train wreck. And that's why I had called it the easiest short in the stock market. I did not short it, but this was fairly obvious. But at the time I said, I don't think that means it's a bad company. It's just priced ludicrously. It was ridiculous. So once it corrected, to me, once it got down here, you know, this was a different picture. But even after it gapped down all the way to by December, this had gapped down to under $3. But it's still down 68% from there. I mean, there was really no good time to buy this stock. But with all of that said, if I go back and look at it, the market cap of this company is $1.5 billion. So if we're somewhere in a crypto bear market, which we clearly are, we can argue, is this a bear market? Is this the beginning of the crypto winter? Is this the middle of the crypto winter? Is this the end of the crypto winter? But it's one of those things. And yet, this company, which is the smallest of all the Bitcoin miners, has a market cap of $1.5 billion, which is dramatically 10 times more than any of the Bitcoin miners were trading during the last crypto winter. So there's no AI play here. And for those of you hoping maybe, you know what, maybe they'll pivot into AI, there is approaching 0% chance of that. And the reason for that is all of their machines are hosted by their parent company, which is Hut 8. They can't get into the infrastructure business. They're a subsidiary of the infrastructure business. So they're never going to be vertically integrated in Bitcoin mining. And past that, they're certainly never going to be an AI company, because then they would be in direct competition with the company that owns them. So this isn't something I have gleaned and put together from magical pieces. They're real open about this. They are a pure play Bitcoin mining company. They have absolutely no intention of doing anything other than mining Bitcoin, hodling Bitcoin, and being a part of the Bitcoin ecosystem. So with that perspective, they're not going to get any bump on AI. They're at a $1.5 billion market cap. If you look at their financial statements, their revenue for the last quarter that they reported, their revenue was $62 million. If you annualize that, just for the sake of argument, because they ran up to about 24 or 25 exahash, so they did add a lot of exahash. They really haven't announced anything since then, so they're somewhere in that range. So this is maybe a $240 million revenue company annually at the current Bitcoin prices. Their revenue is $62 million. They lost $82 million. So when I talked about how the Bitcoin economics are not so good this year, the Bitcoin economics are not so good this year. I'm going to explain to you why they're getting better and why I think it's more important to BitDeer going forward. And then obviously it's ultimately important to ABTC, because this is the only thing they do is mine Bitcoin. So if the Bitcoin mining economics don't get better for them, they're done. But I do think they will get better for them. Having said that, at a $1.5 billion market cap, this is a company that's going to do maybe $240 million of revenue in 2026. Maybe let's go crazy and say they get that up to $350 or $400 million of revenue in 2027. Are they going to be profitable at all? right? Because to double, for this stock to double, that would make them a $3 trillion market cap, which would be, maybe in the magnitude of 10 times their revenue and probably no profit. Now, when there used to be a bunch of these companies and everybody was in the, Bitcoin and cryptocurrency was the thing, right? That was the new thing. It was the hot thing. And so, you were getting growth type potential on these earnings. These stocks were never trading off of their earnings. They were trading on their potential as companies that hodled Bitcoin and mined Bitcoin. And they had nice run-ups, but we're multiple cycles past that. And that doesn't mean crypto's dead, because I don't think it is. In fact, I think Bitcoin's going to be on fire for the next 18 months. But that's a separate conversation. And there's another thing that's happening that I'm going to show you next that is dramatically helping the Bitcoin mining companies from a profitability standpoint. But with all that said, I don't understand what the thesis is for this company to get, how do they become a $3 billion or $5 billion or $10 billion market cap company when the only thing they're ever going to do is mine Bitcoin and hodl Bitcoin? By the way, if you take a look, digital assets pledged for miner purchases, almost half of their Bitcoins pledged against their Bitcoin miners, machines. And that's going to be okay if Bitcoin rallies and everything rallies and these guys make money and all that stuff. But, this is not, it's not the greatest balance sheet. It's not awful. You got current assets of $13 million. You got current liabilities of $110 million. Having said that, these Bitcoin that are not pledged are considered non-current assets, but they are liquid. So I don't think there's anything to worry about from a balance sheet standpoint, a going concern standpoint. I don't think any of that's in play for this company. I'm just not sure what the upside, I'm not sure what the bull case scenario is for this company. Drop in the comments if you guys, I think some of you feel differently, and you may just feel like it's going to run on momentum because right now it's in second place in the voting. So vote if you haven't voted yet. ABTC is a quality company, Sour. Come on, that's from Ethan. And again, I'm still not, I'll say the same thing I said when I was saying it's the number one best stock to short in the stock market. I'm not saying it's a bad company. I think it's already at $1.5 billion. The valuation's already pretty steep. And, if you want to hold a very high risk, high volatility stock, you're looking for a 2x or a 3x or a 4x or a 5x. But that's going to put them at $3 million, $5 million, or billion, $7 billion, $10 billion market cap. I'm not sure that's going to happen. But maybe it will. I'm skeptical. I guess I would say, so I don't know what's going to happen, but this is why I have a very low level of conviction in this stock. It's on the list. We're going to keep watching them and tracking them. Obviously, I wish all these companies well and hope they all succeed, but they're not all going to succeed. And we'll see which ones win. Shockingly, ABTC is in second place in this current vote, but they have the least votes. They're not going to make the top 4 overall. Actually, we could do a 3 and 3. Let's really quickly do that. I'm going to end this, and then we'll do a 3 and 3. Just going to quickly post this. Could take me a second, guys. I'm just typing. Give me 20 seconds. Okay, so we're going to do a 3 and 3. So these are the tops. These are 3 of the top 6. Keel, CleanSpark, and Hive. We're going to narrow it down. So those are my thoughts. I'm not gonna go any further. Those are just kind of my thoughts on where ABTC is right now. I don't own any of this stock. I am not short this stock, and I wouldn't short it right now. And I don't think it's a bad company. I just think Bitcoin economics are tough right now. This is a rough part of the cycle, and they don't have that FOMO AI component to them. Whether these other companies are ever all going to succeed or not, they're getting that push for just being AI adjacent. And they're not just adjacent. The companies that have really developed out database centers, that is one of the big bottlenecks in AI. The memory chips, and I've been talking about that on this channel for a couple of months. I'll go through that real quickly before we go. The memory chips are a gigantic, they're a gigantic bottleneck. And I just want to talk, I'll show you one article because it's worth noting. Gotta find it. Come on now. I'm going to hit this instead because I didn't just find the one I was looking for. I talked about how there were going to be winners and losers. So I think this is an important article. This is from Van Eck. Bitcoin miners AI pivot faces $50 billion reality check, says Van Eck. Bitcoin miners that have spent the past 2 years reinventing themselves as AI infrastructure providers may be entering a more difficult phase of their transformation, proving they can actually deliver. In a new report, Van Eck argued that the market is beginning to move beyond the excitement surrounding AI-related contract announcements and toward a more fundamental question of whether miners can build and finance the massive data center projects needed to serve AI customers. The asset manager estimates that the sector faces a combined near-term funding gap of roughly $50 billion, with long-term capital needs of about $221 billion if current development plans proceed. That's painting a pretty glim picture. I will tell you right off the top, I totally disagree with their takeaway from this. I am not at all arguing that these are not capital intensive companies. These companies are going to have CapEx. We already talked about it on this stream. They will raise money, hopefully at the smartest times and the smartest ways through the best vehicles that are available to them. But we all know they've got to build out all these data centers in order to get their revenue. Now, some of these data centers are already built. Some of these companies are already getting revenue. A lot of these companies have already gotten or are going to get financing from the companies that they're getting contracts from. So this $50 billion doesn't have to come out of thin air. And it doesn't have to come from at the market offerings. And it doesn't even have to come from financial institutions. A lot of this is going to come from Google or NVIDIA or Meta or pick your Mag 7 stock. So, because every one of those companies is involved in AI and every one of those companies has data center needs. I think we're about to have a Big 10, by the way, or Magnificent 10, or whatever name they're going to come up with it, because it is clear, right? SpaceX went ballistic, and I know it pulled back, which was fine, but there was a moment on IPO day, or it may have been the day after, that SpaceX got all the way up to the 4th largest company in the world. Let me just take a look at that chart. It is right now the 6th largest company in the world. I mean, they just started this week. They're the 6th largest company by market cap in the world at $2.437 trillion. Well, 2 days ago, midday, they had passed Microsoft. They were almost at $3 trillion. They were like $30 million away from $3 trillion market cap intraday. They had passed Amazon. They had passed Microsoft. Okay, they settled in at 6. But you're seeing AI take over. NVIDIA is a straight AI company. These are the chips. Google is investing hundreds of billions into AI. Apple, and that's the article I want to find, they're investing hundreds of billions into AI. Microsoft, same thing. Amazon, same thing. SpaceX is an AI company. They actually are renting out. This is a big profit center for them. They have databases. They have capacity. They use it for their own AI because remember, SpaceX consolidated. They own X. They own Grok. They own all that stuff. They own Starlink. So this is a multifaceted company. One of the areas they actually are making money in currently is leasing out high-performance computing data center space. Taiwanese Semiconductor, AI, Broadcom, AI, Saudi Aramco, oil, there's your first one. Samsung, AI, Tesla. Tesla's a tech stock. It's not, they are pursuing AI. They're pursuing robotics. They're pursuing automated driving. But I'll even say that's not a straight play. Meta is spending hundreds of billions of dollars a year in AI. SK Hynix is a memory chip. They do the same thing Samsung does. And oh, by the way, they do the same thing Micron does. Look at Micron and SK Hynix, 1.278 and 1.280. These are both. Now, these stocks they're up, 1,000%. Berkshire Hathaway. And then we get on to some regular companies. Berkshire Hathaway is the only other trillion-dollar company. There's 15 trillion-dollar companies. I think there's going to be 7 or 8 more, 2 of which are going to come through IPOs in the next few months. You're going to get Anthropic and OpenAI that are going public that are both going to be trillion-dollar plus companies. And I think if you move down this list, AMD will shortly be, they're at $876 billion. This company's going vertical. ASLM, Intel is at $673 billion. They could pass $1 trillion this year. Oracle is at $500 million. They could pass $1 trillion this year. So there are a lot of companies in this. All of a sudden, we're going to go from having, a few trillion-dollar companies to maybe 20 or 25 trillion-dollar companies. Now, we'll see if there's a crash on the other end of that, but I'm not going to go into detail on this, but I believe that we are still very early in the AI trade, even for the memory chips, some of which, like SanDisk, are up 4,000%. I actually think, although I don't own it, I actually think it's still a buy right now. So I'm not going to chase that one up 4,000%, but I said that on the channel on a live stream when it was up 3,000%. I said, you know what? It's still a buy right now, but I'm not going to chase it. Well, now it's up 4,000%. And the next time we talk about it, it'll probably be 5,000%. There's a lot of, if you look at the forward PEs of these companies, and what's happening is, and that's why I want to find this article. Give me a second to see if I can find it. I'm just going to tell you about it because I can't find it. Basically, the CEO of Apple came out and said, remember Apple, they're number 3 right now. Apple and Microsoft, which are 3 and 4, these were 1 and 2 on and off for 20 plus years. Then NVIDIA passed them. Google all of a sudden out of left field, when everybody said, well, their search is dead, they're in big trouble, they're up like 140% in the last year. So they were nowhere close to the top of this list, and now they've passed Apple and Microsoft. But Apple is still, virtually tied for the second largest company in the world. These are the big dogs. Apple came out this week, and said, we are going to be raising the price of our products across the board because the price of memory has gone up dramatically. It's not a cyclical move. It's not going to go back down. We are forced to incorporate that into the price of our product going forward, and we're going to have to raise our prices. So nobody buys more of this stuff than Apple does. And they're coming out and telling you, this is not cyclical. This is the old conventional wisdom is, memory companies trade at extremely low forward PEs because if they happen to be in a good year, it's a one-off lucky circumstance that, they've cycled into a short-term shortage and it'll go away. So these could get down to 2 PEs. Micron, and I'm going to show you their stock, they're now almost a $1.3 trillion company. They're still at only about a 10 forward PE. That's one of the lowest in the S&P 500. And they're an ultra-high growth stock, and Apple just told you we're making a multi-year deal with Micron because we can't afford what we think are the next 5 years worth of price increases. So I would not, and there'll be pullbacks, there's massive volatility, but I would not by any means think these trades are gone. By the way, if you're in the United States and you want to get involved in, and I'm not recommending this, these have run up monumentally, so if you've missed it, you've missed it. You guys do your own due diligence. But SK Hynix, Samsung, and Micron are all in an ETF called DRAM. DRAM. And they're the 3 biggest positions. They make up the majority of that ETF. So if you want to get involved in some stocks, specifically SK Hynix and Samsung, that are not U.S. stocks, you can get access to them through that ETF. So, all right, let me quickly update. Let's go back to the Bitcoin chart, and then we'll look at the 1 day. Let me do the final poll. Okay, these are the final 3. Which one's the best value? IREN, ABTC, or Marathon? Okay, I'm just going to show you this Micron thing for a minute. This is Micron. I've been talking about Micron for a little while now. I started analyzing them when they were bottoming here, right? I was looking at them and they had run. Let me put this in perspective. I had written this stock off as something that I was never going to be able to invest in because if you go from their lows in April of 2025 to their highs in March of 2026, less than 1 year, the stock was up 634%. I'm usually not in the business of buying stocks up 634% in the last 11 months. So I had written this off as something that I missed. Then they had a pretty nice pullback. And I started to get very interested. And I did a pretty deep dive on this one. It did take me $100 to pull the trigger, right? What did this get down to? Well, actually, from this point, this got down to 311, and I got in at 365. So that was only $50 I missed there from the bottom while I was going through making my decision. And I decided, you know what? I know this stock's way up. And, you know, it wasn't up 600% anymore. It was up like 450% or whatever it was. But I think that there's a massive, my personal price target, when I looked at this as objectively as I knew how to look at it, I felt like this should be a $2,500 stock. And the reason it took me a few days to buy this is you don't usually look at a $300 stock and say, my price target is $2,500. That felt like something was wrong. But every way I looked at this, I felt like that was totally reasonable. Now, I'm not saying it's going to get to 2,500, but I thought that was a reasonable price target. So I said, you know what? I'm going to start dollar cost averaging in, and we'll see what happens. Well, this thing ran so fast and furiously that I was already up 122% in a month. So, you know, I was waiting for a pullback that didn't come. Now, a pullback did come. In hindsight, this would have been a good opportunity to buy. I did actually buy some of this later on. After that, I added a little bit more. I might add to this on a pullback right now. But this is up from where I bought it. This is up 211% in the last couple of months. That's a stock that was already had a 400 or 500 or 600% run up in less than a year. So just because something's at an all-time high or something's at an all-time low, you got to dig deeper than that, because sometimes momentum is your friend. This stock may be running up just on sheer momentum because it's now the face. This is the face of the AI right now. NVIDIA held that title for a couple of years. Micron is there right now. AMD is in the mix. AMD's having a monster run. I bought some of that as well late into the run, but I'm way up on it. But I did miss, you know, hindsight's 2020. Because for the people that were paying attention, if they bought this in April of 2025, they're up 1,523%. And I do not think this stock is anywhere near done running. That's my personal opinion. I could be dead wrong. I am looking for a pullback, and I will buy in one more time. I don't think we're going to retest this 820. I think that's a pipe dream. If we do, I will definitely buy. I might buy in before then. Not financial advice. Please don't do what I'm doing. This stock's up. I just got through saying this is up 1,500%. So understand that side of the risk equation when you go into this. All right, let me do the runoff, because I think we have our 4, and then the winner of this is going to be the winner. Give me 1 second to type these in. A surprising final 4 for me. So the final 4, Hive, Keel, IREN, and Marathon. What's the best value right now? I just want to make sure we looked, because I don't think I went through this. This is the year to date for what these stocks have done. So we started to talk about this, and then I kind of went sidetracked onto ABTC. You can see Bitcoin's having a down year. right? We talked about this. October of 2025 was the high. It's been going down ever since. It's down 28% this year. It's down a lot more than that from its highs. It is down. A little cleaner chart. Right, we're down 50% right now. And we've been down as much as like 53 or 54%. So the point is, whether you want to call it a crypto winter or a bear market, we're in something. You know, I believe we're very near the end of it. I believe 60 is going to hold. This was 60. We retested it. I was confident this would hold. Having said that, I mean, we are a few bad hours away from this breaking. So I'm not sitting here with monumental conviction, but I am sticking with my pick that 60,000 was the bottom. And I will probably add if this bounces off of 60 again. Again, not financial advice. I know a lot of you think this is going to 50. I've seen predictions of 45, 48, 45, mid-30s. I've seen some even worse than that. So who knows where we go. All right, we got almost a four-way tie going in the final four here. If you have not voted for which one's the best stock, we can't have it. We got a three-way tie for second, and we got one stock in first place. So let's get some votes in, see what happens. And then while you're doing that, I'm just going to go through a few articles just to kind of put some perspective on what the talk is out there. All right, so this is crypto spring is here, says one analyst, after Bitcoin's key signals turn bullish. Standard Chartered analyst Jeffrey Kendrick's bullish call came as spot Bitcoin exchange-traded funds inflows returned, oil prices fall, and Coinbase's CEO says Bitcoin is likely bottomed near 60,000. So Standard Chartered's head of digital asset research, Jeffrey Kendrick, says Bitcoin may have already put in its lows for the current market cycle, arguing a combination of improving investor flows, corporate buying, and easing macroeconomic pressures point to a stronger recovery ahead. So I won't read this whole entire article, but he says talks about how we got down to, we did touch 59,000-ish, and he thinks that represents the cycle low. That's the bottom of the crypto winter in his opinion. And I'm going to give you a bunch of opinions here. This is why I'm saying, and this goes to our vote that we had earlier on. We were very split on where Bitcoin's going, and that's because everybody is. Coinbase's Brian Armstrong says Bitcoin may have bottomed at 60,000. So they alluded to that in the previous article. Armstrong said his instinct is that Bitcoin has probably found its floor, pointing to the 4-year cycle that has historically marked lows. So there is a little bit of an argument about the 4-year cycle because a lot of people argue in the last cycle, was June the bottom or was November, December the bottom? Technically speaking, from a price standpoint, Bitcoin double bottomed in November and December of 2022. And that was surrounding the FTX situation. So I think the question on a lot of people's mind was, it had looked like Bitcoin bottomed somewhere in June or July and was going to go through that consolidation period. But it did take another leg lower. And was that specific to, if you guys remember, for those of you that were here, the FTX situation was a nightmare. Everything had come off the rails. Cryptocurrency was dead and buried for the 100th time. And, so we got I think a second bottom. And the reason I bring that up is, depending on which one of those you consider the bottom, it's June of 2026 right now. So if you think June of 2022 was the bottom, then maybe this corresponds with the previous cycle. But if you think that that November, December double bottom was the bottom, then most people aren't even picking November or December. They're thinking, there seems to be sentiment around October of 2026 as maybe being the bottom and running up from there. So those are just two both valid alternative, projections. We don't know what is going to be the case. We'll find out when it happens. Either way, I think these are good buying opportunities. But if you think Bitcoin's going to 30, you probably don't think this is a good buying opportunity. The winner is changing in this, has changed several times in the poll. So we'll give a few more minutes to get some votes going. Bitcoin buyers at over 250,000 of Bitcoin, between 59,000 and 67,000. So that was massive. This, according to Glassnode data, shows broad-based buying across retail and whale cohorts, with the accumulation trend score reaching its strongest level of the current drawdown. So in this big drawdown, we did have a lot of accumulation. That's a good sign. Bitcoin has reached a deep bear market valuation zone. The hard part may come next. And I'm just running through these because we're going super long today, but I don't want to leave them out. Bear market bottoms are a process, not an event. First, price-sensitive investors capitulate. Then comes the harder phase, months of sideways action that slowly wear down the conviction of those who remain. So that would be the argument that, listen, maybe 60, even if 60,000 is the bottom, do we have 3 or 4 or 5 months of misery ahead where we just churn and burn and that gets the rest of the people out and then we run? Maybe. Buying Bitcoin below its 200-week average has historically delivered over 100% in median returns. So we're under our 200-week average. This is a rare occurrence. It used to be almost a unicorn level occurrence. The last cycle changed that. We actually got down to, I think, our 300-week moving average in the last bear market. And again, that was a lot of that last move with the FTX situation. So there still can be some room to the downside at the 200, below the 200-week moving average, but historically, it's been a monumental buying opportunity. This came out today. Bitcoin traders load up on bearish bets all the way down to 52,000. So there, this was literally today. You're seeing options activity at the 52,000 mark. So a lot of people maybe expect a short-term one more leg down. Bitcoin could crash to 48,000 if this historical pattern is triggered. I went through the pattern for members. It has to do with the Fibonacci numbers. I'm not going to go through it. It's painstaking, but essentially it's talking about every single bear market. We've hit a certain spot on the Fibonacci numbers. We have not hit that yet. We're not down far enough. So we need to get down to 48,000 to hit that. And by the way, in every other bear market, we've actually gone much lower than that line. So if you're looking at previous bear markets by this measure, more like 30 to 35,000 would be a price target. That's not my price target. I don't think we're getting to 48,000 or any of these numbers, but I just wanted to show you a broad spectrum that there's a lot of varying opinions out there. And so, we're going to have to wait and see what comes next. I will leave you with my thoughts. I think there's volatility ahead. We have a geopolitical situation we didn't even get into that, is on again, off again, good news, bad news. I don't think we're done with that. I think that's the nature of that situation. So more volatility ahead, but I am feeling overall for the rest of the year, I'm still feeling bullish about the stocks we're looking at. And I do think we're somewhere through the bottoming phase of Bitcoin, but we will see. Time will tell. Thank you guys so much for all the likes and all the comments. And the winner of our round robin tournament is IREN. Hive and Keel tied for second. IREN at 29%, Hive and Keel at 25%, and Marathon at 21%. Very, very close vote. You guys like all four of these stocks. IREN inching it out across the finish line. So great poll. Thanks for contributing and participating. I hope you guys have a fantastic weekend. Enjoy your weekend. And for the members, I will see you Tuesday after the market closes. Everybody else, we'll see you we're here every Friday. Consider smashing the like button on the way out. It does still help the channel. And if you're not subscribed and you enjoy this content, consider subscribing. Everybody have a great weekend. Thanks so much.